Oliver, happy Thanksgiving. Great to see you.
Great to see you, Carl. Happy Black Friday as well.
I wonder what you make of the week. Some of the discipline that we saw, for example, at Macy's, some of the better than expected guidance at Best Buy and Abercrombie. What do you think's going on there?
There are many cross currents with the consumer. Inflation is certainly hurting the middle to lower income consumer. However, there's a tight labor market at 3.7% unemployment. There's lots of positives about the consumer too. The consumer is going out again. Inflation is negatively impacting consumer discretionary categories. We like Macy's, we like Walmart, and we like Ulta. And shoppers are back this Black Friday season. So mixed signals here, highly promotional as well.
Yeah, but is it your sense that the retailers themselves got religion on inventory early enough to salvage what otherwise might have been a much more difficult environment?
Well, retailers are working hard to work through inventory now, so there is still too much inventory in the marketplace. What they've done is guided gross margins lower, and there's lots of planned promotions. So what's happening and what we're seeing is a wide array of promotions at 20 to 40% off, and they're widely available. So inventory levels are negative, and they still need to be worked through depending on what category.
So, Oliver, the fact that we were talking about it a little bit earlier in the show, but there tends to be this seasonal trade that takes place where retail stocks move higher coming into this time of year. We're seeing it now. I mean, just looking at the XRT retail ETF, for example, is that still a situation where investors can jump in and trade right now, at least in the near term, or maybe steer clear because there is some uncertainty?
Yeah, Morgan, I think you really have to be cautiously optimistic and pretty selective in what you're thinking about. What we like is recommending retailers that have inflation resistance, such as luxury goods stocks, such as retailers like Costco, which offer exceptional value. What we're still seeing is a pressured middle to low income consumer, and inflation is going to be a big negative for the next few months at least. So it's a mixed picture.
Yeah, Oliver, it's David. What's the unifying theme then in terms of your recommendation of Walmart, Ulta, and Macy's?
Yeah, I would say all three offer very strong values to the consumer. At Walmart, you have a consumer staples piece, 50% plus grocery. Ulta is a beauty retailer, all things beauty, all in one place. That's a very good category. And Macy's has done a very good job across a diverse portfolio. All three are offering great gifting assortments as well, and they have very clean inventories coming into a tough situation.
What do you think early next year looks like? I mean, if Terry Lundgren, who was on this morning, is right, and a lot of that excess savings gets worked down by, say, next summer, as some analysts project, what does the retail sales picture look like then?
I think that we're going to watch these inventory levels. January will be a telling month in terms of how much clearance there will be. But retailers are really calibrating to be as clean as possible for next year. So we're optimistic that things can get better. However, the savings rate, savings dollar, savings percentage are something to watch. Also, rising credit usage. These are all things we're thinking about. Hopefully, the interest rate environment gets more favorable. That will have an impact, too, in terms of how the overall economy looks. Unfortunately, a consumer confidence, that barometer is negative. So there are positives and negatives in terms of what we're seeing. But people being back in stores is very exciting to see. And retailers really thinking about giving promotions to customers in an easy way, that's a positive too. And people are going out again, they're traveling, they're wanting fashion, they're wanting to look very great for parties, etc. That's positive as well.